Hello, everyone, and welcome to today's NinjaTrader Ecosystem event, Trading Operational Landscape. My name is Patrick Hodges, and I am a NinjaTrader Ecosystem representative. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage using the phone number or the email that you see on the screen. All right, lastly, if you are new to NinjaTrader, please make sure to sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by clicking or following the link that's in the room there. Go ahead and then click on the Get Started option, and that'll be under the welcome section. You can also follow the link. All right, now before I turn the mic over to Paul, it's important to understand that futures, foreign currency, and options trading contains substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or for a copy of the full CFTC risk disclosure, please visit the link I'm entering into the room here. And please remember that these training sessions are not a solicitation nor a recommendation, but simply educational in nature. I want to thank you all again for joining me here today. And without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Paul Bratby. Go ahead and take it away there, Paul.
Hi, good afternoon, everybody. Okay, so here we go. Operational landscape. Very important for traders to understand what's occurring during the day. Market correlations are very, very important, and we use them as a barometer to understand how that behaviors, whether it's normal or abnormal in the market. And we're looking also economic data points are very important. They really map out the day, and that operational landscape is very important. We don't want to get into trouble. So again, we want to reiterate that risk disclaimer that NinjaTrader just gone through there, and we reiterate those points. So very, very briefly, a little bit about me. So I joined the British Army at the age of 17 and in 1986, so a long, long time ago, and I did 15 years service, and I just had this sort of sixth sense, if you like, or ability to look at behavior and understand markets and see patterns. So I got good at trading, and I left the army. Since then, I was trading for a long, long time. I've wrote a book. It's been published in 2023 called Confluence Not Coincidence. And in that book, I talk about operational landscape. I talk about things, really correlations, very important, and also economic data points. Again, very, very important when we're setting out that operational landscape. Okay, so market correlations. So as traders, we don't need intimate knowledge of all the different assets, trading on different markets in this world. There's a lot of instruments, there's a lot of assets, but it's important to understand and be aware of the correlations between these different assets within the marketplace to gauge normal behavior against abnormal behavior. This will help find reasons not to trade. And that's always been my mantra, really, to look for reasons not to trade. If you've got a set of rules and those rules are broken, then that's the reason not to trade. Again, a good, strong set of rules that are not broken, then you go ahead and you take those trades. So when we're looking at general market correlations, it's how assets move in relation to each other. And that's very important because there's some standard behaviors there that we use as that. And they're our first barometer to gauge market behavior. So we have data and the news sort of leads the markets, if you like. They can lead them up, they can lead them down. And sometimes we get that data that comes out and it's very neutral and we still go sideways. Okay, there's not always a reaction to those, but being aware that that's coming up and sometimes being able to play those data releases. So some correlations we're going to look at. Everything revolves around the US dollar, whether you know, it is the main currency which a lot of instruments are used for against that US dollar. So we're going to look at when the US dollar goes up, oil will normally go up. And at that same time, that correlation gold will go down. And then that euro will follow gold normally. And at that same time, S&P will go up. So dollar goes up, oil goes up, S&P goes up, gold goes down, euro goes down. And then if the S&P is going up, we get the bonds going down. And then vice versa, the dollar's weak, oil will go down, gold will go up, euro will go up because that's intrinsically linked to the US dollar. And then we'll see the S&P 500 go down and bonds go up. So this is what we would see as normal behavior. Now, obviously, some of you are like me. I mean, I trade copper a lot, and I need to understand those behaviors as well, whether how it reacts to oil, and we're going to do an example of that soon, and everything else. So these are just some of the basic things that you should be looking at when we're looking at those market correlations. The dollar is not always the leader. So, and we'll talk a little bit about that in a while. But in reality, what we have is we've got I would say, there's other interesting correlations that are out there, depending on what you're trading. So this is a first look at the trading buddy. We can see like the LED lights of the four indexes. We got oil and copper being positive at that time, a positive correlation, so both going in the same direction. And this is what it looks like on a chart. I've used a NinjaTrader chart there just to show you at the same time. We can see this is copper on the 5 minute and oil down below on the 5 minute. One of the things that we look at is with the trading buddy, and we'll get into more depth with that, is we see some US data at that point, and it sends both oil and copper up. We get to a certain pivot, most likely resistance, and we can see that they both turn down. And that's a positive correlation. They're going in the same direction, and that's normal behavior. However, during the European morning, I understand, because I've been trading copper a long time, we get an inverse correlation between copper and oil, and that's the normal behavior for that time of the day. We can see here we've got European data coming out with these little flags down here, and we can see that pushes up during that European morning copper. At the same time, we get that inverse, the negative correlation with oil. Again, I understand that behavior is normal. And, that takes a little bit of time to understand with the instruments that you're trading, but be aware of that, understand that behavior, and over a period of 3-4 days, then a couple of weeks, start to see those patterns and understand what those correlations are, because that will tell you that everything's working or not. The behavior is normal. If it's not normal behavior, we have to stand back and reconsider whether we actually take trades during this period of uncertainty. So inverse correlations and changing correlations are very, very, very important. We must remember that these can change, and there are the confluences that occur for those to change. So this is an example again with this is the Japanese yen 6J and oil. Now in this situation we can see Japanese yen coming down. This is on the daily. Okay, it's a daily time frame. We can see the longer term trend of the Japanese yen coming down. There's an inverse correlation with oil at the start of this all the way up until it joins in that negative. So we got that inverse correlation to begin with, and all of a sudden we go positive. We need to understand there's going to be reasons for that. There's going to be catalysts and those confluences. In this situation, we can see here, we had this previous resistance where it rejected back to this trend line and came back up again, forming what we would call a double top, simple terms, within a certain percentage of each other of these pivots. And that is the catalyst, the confluence to say, do you know what? Actually, most traders at this point started to take profit, to sell off, and there probably were other confluences that that we need to understand in there. But this is just the basic technical one here, and then we can see that. Then we see the main sort of positive correlation start to take over in that situation. So now this is the correlations part of the trading body. I want to show you some instances here where there's good trading conditions, and maybe there's trading conditions where we need to pause and wait for those correlations to come back. So one of the biggest barometers for me, and before I developed this software, I always used to have a chart set on one of my screens with the 4 indexes, and I used to keep an eye on those and make sure they're all going the same direction. If there's any if there's any sort of neutrality in there, or we've got sector rotation where we've got RTY selling off and ES and NQ going positive, that unsettles me. There's that sector rotation, or there's the lack of sort of pulling in the same direction with those 4 indexes would make me consider being very aggressive with trailing stops, for example, or making sure that my rules are 100% met. I'm not going to sort of cut any corners and make sure that we have good momentum for trades. On the other hand, we can see on this side, on the right hand side here, we've got a total mixed bag. Okay, we've got total neutrality with green, yellow and red on NQ and ES. We've got more bearish, so RTY and YM, it's the Russell and the Dow, are mainly negative, but there's a total mixture there. So there's something going off in the markets that we'd not necessarily understand, but by just looking at this gauge, we can say, actually, whoa, hang on. If I get a trade, if I'm trading gold, I need to be very, very careful. We do have a positive correlation, but only just with gold and ES. There's a neutral correlation here. But on the left-hand side, when we've got those really good trading conditions, we've got a negative correlation with GC and with gold and 6E, with euro, which is not normal. So, we need to be a little bit careful. Copper and gold are going in the same direction. That's normal behavior. And we've got gold and ES going opposite directions. We've got that negative correlation. That's good. That's normal behavior. There's some good trading conditions there overall in the market. So, again, I'm looking really for, in this sort of situation, I've got a lot of gold in there. So that's, I'm at that point, I had it on a chart for gold and I was looking to trade gold. Whereas on the other side, we've got that positive correlation between gold and ES, which is not normal. Then we've got neutral correlations between gold and oil, and neutral correlation between gold and 6E. So this is a situation on the right hand side where we've got to step back and wait. We've got to be understanding that the market, the conditions, the behavior of the market is not quite right for trading conditions. So as traders, we retail traders, and there's nearly 100 million retail traders in the world. A lot of them think they have to trade every single day. Okay. And sometimes they have to trade 3 or 4 times a day. It's not the case. You need to trade when the groove is there. Okay. I call it the groove. So we need to make sure that the market conditions, the correlations are the behavior is a good way. It's a good condition for trading what we want to trade. Okay, if we're all out of whack with these indexes, there's something going off, and we could get faked into a trade and it just runs out of juice. So we just need to make sure, depending on what we're trading, the correlations are correct. The behaviors are normal. So economic data next, very important. It's simple. So why is it so important? Trades can be ruined and accounts be blown if traders are not aware of data points that can cause high volatility and even reversals. So we all get up in the morning and we look what data's coming along, but then something happens. The dogs start fighting. School run traffic gets late, and there's lots of things that happen in life, and sometimes we get in a trade, forget there's economic data coming, and it totally reverses our trade. Okay, it happens. So one of the important things, part of that operational landscape with a trading buddy, is to ensure that we have it on our chart. It's present, it's there, and it's telling us there's something coming along. So types of economic data that makes, not all economic data makes things move, but you're going to be looking at jobs numbers, CPI, manufacturing data, interest rates, housing data, retail sales, things like that. So you need to be planning around that economic data. So, you should always look at what's coming up for the next day and the week and include major data points in the operational landscape for your instrument that you're trading. Okay, so not all data will affect the instrument you're particularly trading. A simple way is to stay out or close trades before that economic data. That's the simple thing. But there are strategic planning for trading reactions to that data, and I do that live. I've done that live recently. I know some people in this room were there, I think it was this week and last week, where I trade gold on data, and I knew that was coming up. I literally went live 10 minutes for the data, put the straddle trades on around the support to resistance and traded gold on that data reaction. There are some days though in the month that's it's not worth trading. FOMC is one of those days where you should be using that as a down day for education, back testing, maintenance, that sort of thing, because those days are traditionally very slow going into FOMC, and those are the days where those correlations are just all over the place and probably neutral. There's not a lot of movement in any direction in most markets. Okay, so what country's economic data is important? Obviously, without a doubt, the US data is the key. Okay, everything revolves around the US dollar. However, German data that affects the euro will indeed sometimes lead the US during the European morning, and that happens a lot. That's why I show you those correlations, the difference between copper and oil, between the European morning and the US morning, and one of those sort of main catalysts and drivers, if you like, is that European data. And then obviously during that Asian session, Japanese data, mainly that surprises may lead the US dollar it's got to be a big surprise. Don't forget Canadian data as well. So this affects gold and oil, and in turn then the US dollar. So that's quite an important piece of data as well. So the Trading Buddy user interface is basically bolts on to NinjaTrader, and there's quite a few bits on there, and I'm going to go through them, and then we're going to just go live on a chart as well at the end, and go through some of the settings that we can go for. So first of all, the main default time is EST. Everything revolves around EST. The next time here, you can change. So I'm in Dubai right now, and it is it's 1:50 a.m. in the morning on Friday morning. Okay, so I could change that to reflect the time zone that I'm in. So I know some people in here in Australia, they're in Europe, they're in the US. So depending on where you are, you can change that, and it changed then the time for that economic date down below. Okay, so then we have the flags. We have the economic data points that are coming up. We can see the flags down here and what type of data it is. We also can see 3 bars in there. So if it's low impact, it's just 1. If it's medium, it's 2. If it's high impact, it's 3. The red line here is actually where the current time is. So what's coming next? In this particular, we've got French CPI, we've got consumer inflation with the UK, we've got a bit of China in there, and then eventually we're coming up to some Canadian data and some US data later on in that day. We can see here, for example, this 0500 hours EST, again, because I've got that on EST. We've got this industrial production, but at the same time, we can see on the chart it's inlaid as well with a nice vertical line. That's the way this operational landscape comes in to effect. So when we're coming up to that, we can understand. We can also use it for back testing to see how our particular instrument reacts to some of this data, which is very, very important. And then we've got those correlation meters on there. At this particular point, this situation, there's no real great trading conditions. And this is something that, most traders look for reasons to trade. They're looking, they see a candle, they see a candlestick pattern, they see a rejection of the lows, and they're going to just trade long. But if those market conditions, those behaviors aren't normal, just sit back, sit on your hands, don't do anything. And then we see here we've got copper and gold positive correlation there. At this moment in time, going back to those charts with the oil and copper, we've got a negative correlation. This is during the European morning. It's normal behavior, okay? And then with copper and HG, we've got a neutral correlation there as well. So again, one of the things that we do say though is that if you're going to have the trading buddy on your chart, just have it on one chart for one instrument. There's a lot of calculations that goes into this. NinjaTrader is a very powerful platform, and we use that power. But there are literally on NQ here 6 timeframes we look at. And then on each one of these, we look at 6 timeframes, and then we look for those correlations. So it's very, very, it's resource heavy. So we suggest you only have it on one chart per instrument. So, and we're going to look at a few of those in a little while. So I just want to give you an example now of having that operational landscape, but then putting some other signal software on there. I'm going to use range breakout in this situation, some confirmation software. We're going to use the heat map, and then the fresh air software. So with NinjaTrader, we've got totally automated support and resistance zones, guardian zones on multiple time frames. Very, very important. And that actually finishes off that operational landscape. Different softwares, but I'm combining them together to show you here. So this was actually this week. Okay, this was gold on the 10-minute, and we have our trading buddy on there. We have our guardian zone. So this is a big confluence zone. So this is a 60, a 30, and a 15-minute, all overlapping, really strong resistance here. And we can see how this keeps pushing up and go. So the catalyst to actually push this through was the European Open. We've got the bias depth heat map here. So all 6 timeframes higher than this 10-minute that we use they're all green. So there's a bullish bias here. Very difficult to trade this range breakout into that resistance, because we can see from the past that this actually does hold very, very well. But we've got to look at the correlations on our meter to begin with. Okay, everything's red on the indexes, so they're all pushing in the same direction. I've got a positive correlation between gold and 6E. That's normal behavior. We've got a negative correlation between ES and gold, normal behavior. And then we've got a positive correlation between bonds and gold, normal behavior. Everything is telling me that I should be looking for a trading opportunity. That first trading opportunity there, it doesn't meet my rules. My rules are signal. I've got a signal. It's going to break out that European opening range. I've got confirmation, but I haven't got fresh air to that resistance zone there. It's a big, strong resistance zone. I've got to wait for it to push through. The trade is, once it closes up above, is to trade the long. You see how it goes up? It comes back to test this confluence zone and then goes long, okay? That's the trade I'm looking for. I understand that the market correlations are good, the behavior is brilliant, and we're ready to go. This is, my operational landscape is telling me correlations, the behavior is good. I understand where I am in the day, and once it pushes through there, I've got fresh air to trade into. That's just one example. So The xBrat Trading Buddy it provides the operational landscape that every trader needs. So what we're going to do is we're going to go to some examples here. Let me just move that out of the way and pull that over. Before I go on to these, are there any questions? Okay. It's probably not something that's normal to everybody. I'm ex-military. I understand operational landscapes, and I think it's very important. And I've been trading for nearly 30 years. I always understand what's going off with any specific instrument, and operational landscape is very important to that. Any questions, put it in the chat. If not, I will crack on. So we saw on the slide deck, I used a daily time frame between the Japanese yen and oil, and they were in inverse correlation, negative correlation for a good 6 months until there was a catalyst and a confluence of that big resistance zone, and then they turned into a positive correlation. So a lot of correlations can be bound for a long time. Okay, now I also gave the example where normal behavior for copper and oil changes twice a day. Normally, in the European morning, when we get a negative correlation between oil and copper, that's normal behavior. And then when we start to go into the pre-market US session, we start to see that they go into a positive correlation. So one of the things that we look at is those normal behaviors, and those normal behaviors don't usually change, but they can do over time. But when we spot that and we understand why that's happened, then that becomes the new norm. Does that make sense? We're not going to have some great correlations right now because obviously the market's the time of the day. So I'm going to look at copper to begin with. I'm looking down on here. We can see there are, in the future, there's some data points here. The first one is tomorrow morning. We've got ECB President Lagarde speaks. Okay, that's a medium we got in there. So one of the things I've done on the back end here on the indicators for the Trading Buddy is I can actually, in economic calendar minimum impact, I've put it medium. So I can change that from low just to medium, or just interested in the high. Okay, so I've put that in medium there. Lots of settings in there. So with the indexes, they're our barometer. You can't change those because that gives you an idea of how the overall markets are behaving. We've got our custom group. Okay, so then we've got basically 3 pairs that we can change depending on what we're trading. Okay, so in this particular case, I've got oil and copper, because this is a copper chart. I've got copper and gold, and I've got copper and ES. Minimum correlation score. So that's when we look at this, if we divide this whole line into 6 pieces, 3 out of 3 would give us a correlation, whether it's negative or positive. But if they're totally different, like this one here, for example, they're all neutral because they're all pop. There's lots of different settings there. For those that are colorblind, you can change the colors and everything like that. And then we can change the event ordering from top to bottom, bottom to top, that sort of thing. We can change the position of the flags on the chart if you want to. We can put them at the top and everything like that. So lots of settings in there. But I'm not really interested in the low. Medium and high sort of impact are the ones, so we can filter those out. Now, obviously, I trade copper, so you can see some trades in there anyway. But I just want to talk about some of those correlations and where we get those sort of data points, if you like, and we look at those behaviors. So I do have the Guardian zones on this chart because I always use those Guardian zones. But I just wanted to show you that we can see some price coming down into this big confluence zone here. So this 60, 30, and 15-minute. Then we get that UK data, okay? And remember, we get some really good moves during the European morning with copper. And we then start to push up here. We get European data at this point, which continues that push all the way up. And then we get Canadian data. What does it do? It drops on that Canadian data, but then goes to that main trend again. So there are some really good points of control with copper. And again, we can see here where we're coming back down to test this this support zone here. First bit of US data, we do get some reaction, but it still tries to come back down. But then we get that support, we get more data coming in, and we get that push up at that point there. So again, very important, and understanding when that's going to happen, you can actually play those data plays, very, very well. Let's go to a gold chart now. I just wanted to basically, gold for me, I do trade gold as well as copper, and I trade sort of data plays with that. So I just want to go back a little while and look at a data play, which was, we'll see the trade on here somewhere. Are we going too far back now? I think, yeah, okay. But we can see how gold can react to some of those data points in here. So here we're going sideways. We come back down on this particular US data at this point here. We get a push down. We help sort of hold at that 60-minute zone, and then we get this other data that pushes into this big confluence resistance zone. I did trade that short coming down from here to that point there as well, because that really did hold. We had all of this catalyst, if you like, pushing it back up from this resistance, but it still failed to push through there. So when it came down, that was my, I understood the behavior, right? This is why we pushed in there. But even though we had all of this data pushing us into that resistance, it was not enough. When it came back down, there was a good shorting opportunity there. And then, today, we can see that we've tried to push back through with this European and US data here. Canadian data's happened. We've come back down to test that support, and then we've gone sideways because there's nothing happening there. So oil. So this is a good example. I talked about Canadian data being a factor with things like gold and oil, and that was a factor today. So all the way through basically the European morning, oil was really pushing up against this confluence zone. If I just take the 60 off, you'll see the green, which is the 30. And if I take the 30 off, you'll see the 15-minute zones there as well. So this is it's a confluence of multiple time frame resistance zones. Very difficult for this to push through. Then we get Canadian data. We get that blip, and look how it reacts to come down here. The trade was short here, coming down at this point to trade oil short. Once it broke through this support there, all the way down to that point there, that was the trade today. We understood there was Canadian dollar, big Canadian data coming out, IVPMI. So down here, we can see that was sort of medium type stuff that was, potentially going to give us a reaction. It did. We're not going to trade short into this support, but once it breaks, we trade that trade going down there. Very, very, very simple. Again, we can't comment on the correlations right now because of where we are, the time of day, because we're all neutral right now. Nothing's happening. And then I trade FDAX. Okay, I trade the DAX as well. And again, we can see. So what I've put on here is our range breakout strategy, because in any instrument, we can define an opening range. So the DAX closes at night, it reopens again at 8 a.m. in Europe time, so it's 2 a.m. EST, and we can define that range, and we can trade coming out of the range and back through. We can see that we've got British data here at this point, which it actually forced that down all the way down to European data. We've got a confluence of European data, that support zone, it pushes it up, comes back down to test again, and then this European and US data this morning was enough to push that from that support, through, and the trade would be through that range breakout there to trade that long at that point there. So very, very simple. And we can see there's other trading opportunities. It doesn't matter what instrument it is. Understanding, we can see European here. We just had Australian data come out just before the European Open. Boom, all the way down. Does the range breakout, lots of fresh air all the way down to this point here. But again, this very, very simple tool allows us Japanese data there, US data, Swiss data, we can understand. So this here, we're not going to trade out of this long until we break this zone. We can see that this, this Swiss data at this point here starts to push us up. The trade breaking this 15-minute zone here was great. It came up, it came down to test the support and then pushed again. Something, you know, a stop below there would be a very sensible stop for this sort of situation. But understanding what's occurring, what's coming up can help us really sort of put strategies together. If we're in a trade, make sure we're safe, we're risk-free with a trailing stop, or we're locking in profit. If we're not in a trade, don't get in a trade 15 minutes before this, you know, we're entering into this flag. Don't enter a trade 15 minutes before that economic data point. Wait for the reaction, understand the reaction, check the correlations, and trade your strategy if the rules are met. Okay, so we've had a good sort of 35 minutes there, lots of different examples. So any questions from the floor about the trading buddy? I am going to give you a link here for a 30-day free trial of the trading buddy in the chat. And we do have the Guardian zones available, but again, they're on the website. Today is really about the trading buddy, a very, very essential tool. You know, it's something that everybody should be aware of. Those market correlations, that behavior is very, very important, but also the economic calendar, having it there and present on your chart is just, it's such a help. It's something, and that's why we call it the trading buddy. It's there to help you so you're not making mistakes and you can start to plan for the day, making sure that you're aware of everything. There's no signals, okay, Joseph, there's no signals with this. This is a trading buddy. I talked about trades that I've taken because I understand the behavior and where we are with the data points and everything like that. Okay, this is not a signal tool. It's a trading buddy tool to help you understand behavior. We don't have a free trial on the Guardian zones, I'm afraid, because it's been going 2 years now and we've got lots of users and they are extremely sticky zones. Okay, if I go back to gold, we can see I did trade. I just put the previous zones on. Trying to find those trades now. So for this, I want to show you this particular trade. It exited on the Guardian zone purely because this is one of our automated strategies. So this was a range breakout. But look how, I mean, this is just a zone on a chart, Alexis, okay? This is drawn by our software and algorithms, and this is institutional decision points on multiple timeframes. Look how it cannot push through, and this is why I took profit at this point here. It just wouldn't push through and came back down again. That's how sticky they are. Really sticky zones there. And I can go on. This is another trade here where it actually pushed through the zone. That was the entry, the blue arrow here, okay? And the exit with a trading stop at this point took it out, okay? But look what happens when we get to the next one. Really struggles to push through. They're only available on NinjaTrader, and I'll put the link in the chat here. So they're only available for NinjaTrader, the Guardian zones, because the logic is so complex. NinjaTrader is the most powerful platform, And we develop for lots of platforms, but it's the only one we can get Guardian Zones working properly, because it goes all the way from your native time frame is from 5 minute all the way up to a weekly. Okay. If I actually just jump off here and go to, where are we? Let me try and just put ES on quickly, duplicating a new tab. Let's get rid of the range breakout for a minute. And then I'm going to go to the Guardian Zones. I just wanted to show you something on ES because I'm going to just disable the 15 and the 30. It's very interesting where we are right now on ES. I'm going to click apply, and then I'm just going to change that to ES. So let it just calculate. No, Joseph, no, our automated strategy. The free 30-day trial is on the Trading Buddy. Okay. That's just calculating zones. Okay. So it's calculating all the different time frames, but it's only going to show 60 in the weekly for now. So this, I'm just going to just uncheck that. That's the weekly zone that we're below on ES right now. Okay. So these are the 60-minute zones. We can see how they're coming to test, they're bouncing off. But look how it tried to push through that weekly zone and really struggled. We came back down to test the 60. It's come back into the weekly again. It's just not liked it. It's not liked it at all. This is very crucial. Have we got another weekly zone all the way down at this point? There's a daily in gray there as well. So we can see if this cannot push through this weekly zone, there's a potential. This next support that's just above 5,200. Oh, it's 14-day free trial. Sorry, not 30-day. My mistake. On the Trading Buddy. But yeah, Guardian Zones, very, very sticky. I just wanted to show you this on ES because this is very prominent where we are now with this weekly zone. Okay. Any questions on the Trading Buddy? It's just one of those essential tools you've got to have on your chart. Okay. I trade copper, I trade gold, mainly copper. I am trading, starting oils, starting to get back in the groove a little bit. So I'm going to be looking at a bit of oil soon. But any questions before we wrap up, really? You know, it's a simple tool. There's a lot of technology behind the scenes, but I just think it's essential that people understand those correlations, and we can put them on there. And also what's coming up, and then we can see actually how our instrument behaves on specific datas, and whether they've got that confluence with the Guardian Zones, we start to understand the total operational landscape of our instrument. We do have a automated strategy builder called the ZoneTrader Pro, which trades that. Okay, so we do have that, and we have got everything switched off because I wanted to keep the machine. So let me just strategies. So what will happen is with the ZoneTrader Pro, that trades automatically once you've put that together, and it works very, very well for trading the zones, really. An example here, this is a dev copy, but it's the same thing. This was today, I think. So this was copper, and we pushed eventually through here, took the long trade, just took a trading stop out there at that point there. So very, very strong. It's a good strategy, but you need to optimize it. But there are some really good sort of opportunities with the ZoneTrader Pro as well. Yeah, for the ASBs, bear with me. ASB, automated strategy builders. We have 5 different strategies. And they all are, bear with me, on this link here. So we have the range breakout, the slingshot, the zone trader pro, the roller coaster, and the VWAP predator as automated strategy builders. Okay. So any more questions before I go? Hopefully you can see the value of Trading Buddy, really, really strong. I mean, I use it all the time. I go live and, you know, we traded gold the other day. I was only live for 10 minutes or so, but you know, it works because you understand what's coming. Then you put the Guardian zones on and you understand where your support and resistance zones are. And all of a sudden you have a total operational landscape and being able to understand those correlations. So any questions before we wrap it up? Last chance. Okay, thank you for attending today. It's after 2 a.m. here in Dubai, so I'm going to wrap it up and go to bed.
All right, thank you very much for that, Paul. Appreciate you taking the time to show that for us here today. Everyone in attendance here today will receive an on-demand recording of today's event, so please keep an eye out for that email. If you did enjoy today's session, we hope you'll join us for additional NinjaTrader ecosystem events. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. I'd like to remind everyone that the information provided here today was that of xBrat Software Solutions, global trading software, and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you all in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.